Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
Welcome to CNBC Africa's Crypto Trader, the show that brings you crypto news from all corners of the world. This week we're coming to you live from the financial capital of the world, from New York City, where we're covering CoinDesk Consensus Invest. For the next 30 minutes, I'm going to bring you highlights from Consensus Invest. I'm going to give you trends from 2018, and I'm going to boggle your mind with crypto news from New York City. What's a visit to New York City without gate-crashing Brian Kelly's fast money? So like I said, I decided to crash Brian Kelly's Fast Money show. I've got the man right here. Brian, good to see you, my friend.
Good to see you, Ran.
What a great show. What a great energy levels you guys have got.
It's a lot of fun.
A lot of fun, yeah?
Yeah, it's a ton of fun. It's a great group of people. We get to talk stocks all the time, and now we even get to talk Bitcoin quite a bit.
You see, that's the thing. I was listening to what you guys were talking about. It was very little crypto and a lot of stocks.
Yeah.
That must kill you.
So I could talk crypto all day long, so I would love to talk more about it. But here's what's kind of interesting, because we're talking about stocks, but a lot of people are trading crypto and stocks together, right? It's not separate. So, back in the 90s when I was coming up as a trader, everybody was day trading the internet stocks. I think everybody's trading crypto now. That's where the marginal dollar is going.
Well, someone told me that you can't actually say you're running a balanced portfolio of crypto, because it's actually a balanced portfolio must have a couple of % of crypto. Right.
Well, I think so, right? And if you even took 1 or 2% of crypto, allocation of crypto, you would actually increase your returns and lower the volatility of your whole portfolio, because it's not correlated. So it's like a golden asset. You want to have this thing in your portfolio.
But after what happened on Black Friday, everyone's taking the majority of their money and putting the majority of their money into crypto, or wants to take the majority of their money and put it into crypto.
Yeah.
Let's talk about Black Friday. What the hell happened?
So, it's funny. There were a couple different things that I think were the driver. One, you had this report that came out that a lot of the more Bitcoin than people expected had been lost. Number two, you had a lot of retail buying, right? So I think, just anecdotally from everybody I talked to, they were all sitting around telling their relatives to buy Bitcoin, and they finally listened, right? We've been telling our relatives for years to buy Bitcoin. I think finally everybody took it to heart today. And if you look at the price of Bitcoin, and I showed that chart on tonight's show, you saw Bitcoin and Ethereum, the price go down during the Thanksgiving hours and then just take off on Friday morning. So I think it was a lot of money coming into the system.
So the price went down when everyone was at home eating turkey.
And
then the price went up because everyone told their grandmothers to open accounts.
Exactly.
I'd love to take your graph and put a Coinbase number of accounts opened just after.
I bet you there's a great correlation between it, for sure.
So Mike Novogratz came on and he started to speak about the percentage of people's wealth that should be in crypto.
Yeah.
So what's your take? Currently, where we are today?
I think 1 to 5%, depending on your risk tolerance, where you are, I think is an appropriate number. I mean, this is still a new technology. This is still an emerging market, so it's not going to be without risk. And let's think about it. Bitcoin is at roughly 10,000, 9,600 as we speak. Bitcoin could drop by 50% and still be up on the year, still be up massively on the year, right? So you got to understand, it's extremely volatile, new technology. 1 to 5% is not a bad allocation.
So, but 1 to 5% can become 10 or 20% very quickly. Then what do you do? Do you take money off the table and put it back into non-crypto related, or do you take your 1 to 5 that has become 10 and leave it in?
Do you let it ride?
You let it ride.
Depends if you're a gambler or not. I think it would be prudent to take some off the table and use it for something else, use it for savings, that type of thing. Just like any part of your portfolio, where if it gets too big, you want to trim a little bit. So that's what I would do.
When was the last time you took money off the table from your personal portfolio?
Oh, let's see. Relatively recently. For my personal portfolio, probably about a month or so ago, not necessarily in Bitcoin and some other coins that I own, I took some off the table. I tend to be more active in my personal portfolio with other coins, kind of the altcoins, than I do necessarily with Bitcoin and Ethereum.
Taking money off the table, do you think that we've had a very big spike now and we can expect to see some kind of profit taking? Everywhere I go, people are telling me about Bitcoin. That's the first sign of what they call a bubble. Now, I'm not going to use the word bubble because I think it's too premature to call it a bubble. But I mean, do you think it's time to maybe take some money off, keep it in cash, and wait for some kind of correction?
Sure. Yeah, listen, I mean, this is a market just like anything else. So Bitcoin is not immune from that human fear and greed. We will have multiple bubbles. We will have multiple crashes through this period of time. So, you know, a prudent trade would be you sell into the spikes and you buy the dips. That's hard to do, and that's why a lot of people have a hard time trading. But when it feels horrible, that's usually the best trade. So I know when I'm selling Bitcoin and it feels terrible like I shouldn't do it, that's the best time. And when I'm buying Bitcoin and I can feel it on my stomach and I want to throw up on my shoes, that's the best time to buy Bitcoin.
That's such an amazing analogy, because for me, when I feel like I want to buy because I'm getting FOMO because it's going up, that's usually the time to sell.
That's the time to sell.
So we've just arrived at Consensus Invest in New York City, and I met Perry Ann earlier, and she's agreed to co-host the show with me. So this week, it's not only going to be me, it's going to be the lovely Perry Ann Boring. Perry Ann, welcome. I'm so excited to have you with us.
Thanks, Ryan. This is going to be an amazing week. It's one of the biggest events in the crypto space. The entire industry is here. People are here from countries all over the world to talk about crypto and investing.
Awesome. Let's go do this.
All right.
After an amazing talk at Consensus Invest, I managed to bump into Chris Boniski, who's the author of the new book called Crypto Assets. Chris, what an absolute pleasure. What an amazing, amazing talk about Bitcoin and the state of Bitcoin.
Thank you.
So you've got a great background in terms of asset classes and classifications. Your talk, Bitcoin, what is it?
It doesn't look and behave exactly like any other asset class that we have, which is why it is a new asset class that's native to information networks.
So let's talk about the comparison that people make between Bitcoin and gold. So people talk about Bitcoin as a store of value, a digital gold. You kind of disagree with that.
Well, I do think Bitcoin's a store of value, but I think it's a better store of value than gold is in terms of its supply schedule. So what I talked about today is gold is actually on a slightly inflationary supply schedule. So over the last century, gold's above ground stock inflates 1% to 2% a year, which produces a curve that looks somewhat like an exponential because you're compounding. Bitcoin is actually disinflationary going on deflationary, and it stops at 21 million, right? So that is actually a much better supply schedule than what gold is.
For a store of value. Let's talk about volatility. So there's a lot of talk about how volatile Bitcoin is. And you brought up some great points about the reality of the volatility of Bitcoin. Is Bitcoin a very volatile asset?
Bitcoin is a volatile asset, but it's not more volatile than other high growth assets or some commodities that people already hold in their portfolios, which is really the point I was trying to make, right? So 2 points there. Bitcoin's volatility has come down considerably over time, right, as liquidity is built. But 2, for example, if you look at 2016, Bitcoin was just as volatile as oil and less volatile than Twitter. And so again, that's just contextualizing Bitcoin with other assets out there.
What happens when you do that on a risk-adjusted return basis?
The Sharpe ratio?
Yeah.
So Sharpe ratio being where we divide absolute returns by volatility. Bitcoin is clearly outperforming other traditional capital market assets in terms of compensating investors for the risk they're taking.
So right now, Bitcoin's not correlated to any other asset class. If you compare it to equities or bonds or commodities, do you foresee that staying that way? So is Bitcoin going to have its own trajectory completely uncorrelated to any equity investments or commodity investments?
I think right now it's near zero correlation is indicative of it being an emerging asset, right? And over time, we will expect to see it play more with the other capital market assets, right? Because it will enter broader portfolios. So just as we see gold being used as a risk-off hedge and often being negatively correlated with, say, what equities are doing, I think that's a trajectory that Bitcoin will probably take.
So we've spoken a lot about Bitcoin. What about the rest of the market, Ethereum and the ICO market? Are you a Bitcoin man or are you a full crypto man, so to speak?
I'm a full crypto man. Very fond of Bitcoin, and I think a ton of good work continues to go on within the Bitcoin ecosystem. The way I approach it is this is a new asset class, right, that organizes and incentivizes human activity in a novel way, and in a way that is much more symbiotic with information networks, and our world is increasingly ruled by information networks, right? As opposed to equity, which is a 400-year-old asset that has kind of been hacked on top of information networks, needs to suck out profit from those networks to justify, these lofty valuations. It's just an entirely different model, and so I'm really excited, to see what Ethereum's doing with it and a bunch of the other assets out there.
So Chris, you are a crypto man. If I were to put you on the spot and ask you for your top 5 tokens, no buying, no selling, 3-year holding period, what are the 5 you'd hold in your portfolio?
I don't give public investment advice that way.
I appreciate that. 1 second. You gave me a book earlier.
Yes.
And you signed the book for me, right?
Yes.
So I think what I want to do is I actually want to give this book away to some lucky viewer who's watching the show today. So Chris and I are going to post a tweet. And if you guys retweet the tweet, the thousandth tweet is the one that takes the book. So go ahead, retweet. Linda, you're one of what they call the Coinbase Mafia. What is this Coinbase Mafia term all about?
I mean, it's just a term where people who join Coinbase leave Coinbase and go off and start their own things. It's not even just hedge funds or anything. There's also a few projects that are starting up in the Ethereum space. But I mean, Brian Armstrong, who is CEO of Coinbase, he's very much encouraging of people starting their own thing. You learn a lot at the company, and then you just want to get deeper in the space and do your own Ethereum.
So what are you doing now?
So I left Coinbase to start a crypto hedge fund called Scalar Capital, and we're very much focused on long-term investing in the space, trying to be a value add to projects that we invest in, helping from a technical standpoint to strategy to just making intros and be helpful as possible.
So everyone that I speak to here is talking about starting crypto funds or blockchain funds.
Yeah.
What's going to make you different?
Yeah, so I think what makes us different is we're actually from the crypto world. Like, we've been in this space for a few years, and my co-founder is also from Coinbase. So we really have been able to withstand all of this volatility in the space. Even when I joined Coinbase in 2014, the price wasn't going anywhere, and yet I stayed really adamant and that this was the future. And I think that we're going to see a lot of volatility. And as these new hedge funds come in, and if the market does a downturn, I think we're going to be seeing people fleeing the market, but we're very long-term focused and actively want to be involved in these projects and help grow things as a whole, participate in decentralized governance if the tokens allow for. So for us, it's very much just be part of the community.
So starting a fund, you obviously have an investment thesis. What are you looking to invest in?
Yeah, one of our investment theses that I think is a little bit different from some of the other funds is focus on privacy coins. My experience at Coinbase actually doing this investigations really made me realize how important privacy is. Everything's completely traceable with Bitcoin. So
but everyone thinks that Bitcoin is private. I mean, that's what the word on the street is.
Yeah, it's not. I mean, it's crazy because every single transaction is recorded on this public ledger for the history of time, and there's so much information that can be revealed on the blockchain. And so if someone just says hey, donate to this address, I'm raising funds for this, now everyone knows that that's your address, and they can always see what you're doing with your funds. I really like Monero in that everything's private by default, and so they're using a technology called ring signatures that has been battle tested for a very long time, and so the technology is sound. And then the team is very focused on development and actually trying to make sure that privacy is a focus. And then Zcash, it's using cutting-edge technology, ZK snarks. These brilliant researchers in these universities are working on it, and you essentially can prove that something happened, prove a transaction happened without revealing any information about it. the thing about Zcash though is the technology is fairly new, and it's also very memory intensive, and so not every single transaction right now is anonymous. And so when they finally get to the point where every transaction is anonymous and it's easy to use, I think Zcash is going to be really huge.
Any small coins, small tokens that are not in the top 10 or 20 tokens in this privacy space that you're keeping an eye on?
I'm definitely keeping an eye on Pivx. So it's kind of like Dash, but they're using proof of stake, and they did some adjustments so that there was no like Instamine in the very beginning. So I'm keeping an eye on that. I generally try to focus on the larger coins because of the liquidity, but definitely look at some smaller ones. You're going to be having hundreds, thousands of tokens that people are going to be needing to trade, and so you want to make it so it's a seamless process for the user, and they don't have to then go on and create an account on a centralized exchange, have to worry about custody. GDAX and Coinbase are really great, but they also only support 3 coins right now. So you want to make sure that you give access to everyone in the world, and so there's a bunch of these projects that are making it easy for someone to create this infrastructure.
So for our users or our viewers that don't know the difference between a centralized exchange and a non-centralized exchange, just wrap it up for us in a nutshell. What's the difference between, say, a Bitfinex or a Kraken and a decentralized exchange?
Yeah, so in a centralized exchange, when you are storing your coins and you're actually purchasing the coins, there's custody of the coins with the actual entity, the exchange themselves. So like you don't actually have ownership of these coins. They're storing your private keys for you. So if you want to pull out your funds immediately, the exchanges have the ability to essentially block that from happening, or it's also risky because these exchanges can get hacked at any moment. So with centralized exchange, the custody is not with you. With decentralized exchange, you have full ownership of your coins at all times, and I think that's really important. It's not for everyone. Like I wouldn't send my grandma to use a decentralized exchange, but centralized exchanges are really great for people that don't want to have to deal with that. But for people that are more familiar with the technology, I think decentralized exchange is absolutely the way to go.
So when we talk about decentralized exchange, again, it's another one of those big topics. Who's in the lead in that decentralized exchange race at the moment?
Yeah, so I definitely think 0x is, and I'm advising that project, so I want to disclaim that, but they are already live. So when they did their token sale, they were already live on mainnet. So there's a lot of these like decentralized exchange protocols that have a great white paper, really strong team, but they haven't actually shipped the protocol yet. Whereas 0x has already shipped it. There's this whole like relayer ecosystem building on top of them, and there's already decentralized exchanges that are live right now, which you can use to trade tokens. So one of them is called Radar Relay. And so when people ask me, how can you buy 0x tokens, I actually direct them to Radar Relay, and I say, actually take your ETH, exchange it for wrapped ETH, which is just, it's a standard framework. It's called ERC20 token, so you make it really easy to exchange into other tokens. So change it to a wrapped ETH, and now just use Radar Relay, place an order, and you can buy 0x. And so it's already existing, and I think they're by far the leaders in the space.
We're seeing so many new, innovative, and creative companies here at Consensus Invest. One company that's received a lot of attention lately is Salt Lending, which is a platform that uses blockchain-based technology to leverage digital assets and blockchain assets for loans. So we're here with Blake Cohen, one of the co-founders of Salt Lending. So Blake, tell us about Salt in your own words.
Thank you. Yes. What we have created is a platform that facilitates blockchain asset-backed loans. So our first product is Bitcoin-backed US dollar loans. So if you are a holder of Bitcoin and you don't want to sell that Bitcoin because you believe that it is going to continue to appreciate and you don't want to get hit with a capital gains tax, rather than dispose of it, you can come to Salt Lending and use it as collateral for a cash loan. So how it works is you come to our site, create a profile or an account. We would run you through anti-money laundering and know your customer protocols. And when you pass those, then you can search for loans, varying loan terms, varying loan size, loan-to-value ratios, interest rates, payment structures, find the loan that you want. Then you would send your collateral into a multi-signature wallet where the borrower, the lender, and Salt Lending hold keys. And say you sent $100,000 worth of Bitcoin, you would get $50,000 wired to your account. At that point, we monitor the value of the collateral, and our technology monitors the value of the collateral and makes logic-based decisions on when to make margin calls, when to execute liquidation events based on not only the value of the collateral, but other parameters such as bid-ask spreads, liquidity, and price velocity.
So I can understand where the demand for this product would come from, as there's many people, individuals, investors who have bought Bitcoin or other digital assets. They want to hold them, but at the same time want liquidity for other reasons.
Yeah.
So talk a little bit about the interest rates, and so if someone was going to come to Salt Lending to use this service, what types of deals can you get for them?
Yeah. Before I answer that, I wanted to touch on something else you brought up, which is use case. You know, to us, it's self-evident how much demand there is. You know, I don't know what the market cap of Bitcoin is this morning, something like $150 billion, but our users really are really diverse. Anything from individual investors who need cash for paying off medical bills or student loans or to buy a car or a house, to institutions such as exchanges and miners who, you know, a miner might need to purchase more equipment or make payroll, pay their energy bills, to ICOs. You know, you have all these ICOs or token issuance events where people are taking in tens, if not hundreds of millions of dollars of Bitcoin and ETH to build, and then when it comes time to actually build their product, they have to liquidate all or a portion of the Bitcoin and ETH that they brought in from those token issuance events. Rather than do that, they can come to Salt Lending and get a cash loan to build out their business and continue to realize the appreciating value of the asset. As for interest rates, you know, interest rates and loan-to-value ratios, payment structures, that's driven by the market. What we are seeing right now is loan-to-value ratios between 20 to 50%, interest rates in the teens to the high teens. I believe that as we introduce more competition on the lending side, you'll see those rates go down. But even in the teens and high teens, this is a very attractive proposition to our borrowers because they don't have any other options at this point, and capital gains taxes are as high as that as well.
So we're in the middle of New York City, we're in Times Square, and I bumped into Spencer Bogart, who was fantastic on stage. You did some research around Bitcoin. Tell me about the research.
Sure. I mean, I started publishing research. I put out the first price target on Bitcoin. Put a price target of 655, and it was trading in the low 400s. And you know, people definitely thought it was a crazy call. And it's one of those ones that feels pretty vindicated at this point.
And so today, you guys ran some more research about what people perceive Bitcoin to be.
Yeah. So exactly. Yep.
Would people rather buy Bitcoin or would people rather buy equities?
We ran a survey around across the country, over 2,000 individuals, run by the most reputable survey provider, really solid survey. What we found out was that 14% of people said they prefer Bitcoin to stocks, 27% of millennials. So if we think about young people as being the future, 27% of millennials said they prefer Bitcoin to stocks.
But are they actually buying Bitcoins? How many of them actually own Bitcoin?
Amazingly, they don't yet. So right now, I think ownership is less than 2%. And so if we went from less than 2% to 14% actually purchasing, that would be a 10x increase in adoption, which the effect on price would probably be significantly larger than 10x.
So what's the gap between wanting to buy Bitcoin and buying it? What's that gap?
There's a lot of friction in the kind of KYC and AML process of signing up on a lot of the exchanges, and a lot of them are completely overloaded right now. So if you try and sign up on some of the major exchanges, there might be a wait period of a month, 2 months, or 3 months. And so if we can have really quick, seamless processes for people to be able to buy Bitcoin, then they will. I think they'll do that. They already feel a little uncomfortable and they're going to go and move into this world of cryptocurrency for the first time. And when they go to sign up on an exchange and then they ask them to provide their passport and connect a bank account, people get really nervous and they fall out, right? But if it's offered on a platform that they've already done that for, like for example, Square's announcement with Square Cash App, that's an app that you can sign up for and get through the process, the onboarding process in about 30 seconds. And then you can buy Bitcoin.
So what you're saying is in 2018 we can expect Bitcoin to become way more mainstream and to get much more adoption, and the adoption is going to come from the millennials.
I think it could come from the millennials. I think it'll come from a lot of older demographics as well. I mean, I think that if major platforms like Fidelity and things like that start to offer buying services for Bitcoin, it'd be hugely bullish. I mean, all of a sudden now people can just push a button instead of going and signing up for a whole new account.
Sounds incredibly bullish. I want to move over to the next part of your presentation, which was whether Bitcoin is a currency, a commodity, or a platypus.
Bitcoin is a platypus.
Why is it a platypus?
It's a platypus. So the platypus is the most bizarre animal on the planet. It's a venomous, egg-laying, duck-billed, beaver-tailed, otter-footed mammal. None of those things are supposed to go together. When people first found the platypus, the leading scientist at the time said it can't be real. This is an elaborate hoax that somebody's done. Only on really careful examination did they say, okay, this is a real animal and it has all these unique characteristics that work together really well. Bitcoin's very similar in that respect. So Bitcoin in some ways looks like a currency, in some ways it looks like a commodity, in some ways it's like a fintech company, right? But really has features of all of those things, and Bitcoin is just its own category.
So what you're saying is Bitcoin. Don't try and make it into a currency or commodity, because those are old asset classes.
Right.
Bitcoin is Bitcoin.
Right. Investors are trying to contextualize it in these buckets that are familiar. Do I put it in my currency bucket? Do I put it in my commodity bucket? It's its own bucket. So
the currency guys are saying it's not a currency because you can't transact. Yeah, the commodity guys are saying, look, I can't hold it, so it's not a commodity.
Right.
It's Bitcoin.
Right.
And don't try and classify it.
Totally. Well, just like, I mean, the platypus, look, it's not good at being a duck, it's not good at being a beaver, it's not good at being an otter. It's really good at being a platypus, though. In Bitcoin, it's not great at being a currency, it's not great at being a commodity, it's not great at being a fintech company, but Bitcoin is great at being Bitcoin. It's its own category.
So where does Bitcoin get its value from?
Sure. I mean, I think about three major components of value. So I think the first one that people kind of see when they hear cryptocurrency is they think about it as payments technology. And, you know, that's true. I mean, people do use it for payments. There's certainly value in Bitcoin and payments. I think that'll be part of the story longer term. But I think the reason why people are buying today is as a digital gold, because they want to own part of an asset that is part of a decentralized, permissionless, censor-resistant network. And then I think lurking below the surface is this idea of Bitcoin as a natively digital and programmable asset. So I can do things with Bitcoin that I can't do with traditional financial assets.
So stop, let's go back. Natively digital and programmable asset. That introduces like a whole new world.
A whole new world.
I mean, that in itself should give Bitcoin a huge pricing. Let's talk about what that actually means. How can we use programmable assets?
Yeah, so the two early examples of Bitcoin would be multi-signature transactions and time-locked transactions. So with a multi-signature transaction in Bitcoin, I can send Bitcoin to an address and specify that that Bitcoin cannot be moved from the address unless, say, 2 of 3 or 3 of 5 people agree, whatever parameters I set. Now again, that's something I could recreate that in the traditional financial system. I could hack it on the top of it, but this is now just a few lines of code within the Bitcoin software, right? This is software, it's the world, but it's eating the world of financial assets and value. Time-locked transactions are very similar in that regard.
So these time-locked transactions say that I'm going to put this Bitcoin into an account, and it's only going to open in, say, 5 years.
That's it, exactly. Or maybe 5 years might be a lot for Bitcoin right now. Maybe you say 3 months from now or a week from now, things like that.
Well, if you lock it up for 5 years, you may be a
It might be amazing, yeah.
So Spencer, for what you're saying, very bullish on Bitcoin, and 2018 is going to be the biggest year yet.
I think 2018 could be a great year. It's also 2017 has been a hell of a run. So, you know, if we get a pullback, I think it'll be okay.
Blockchain technology represents a paradigm shift in terms of the way we trade, sell, and invest digital assets. And this technology has captured the attention of the world's most respected technologists and entrepreneurs. I'm Perry-Ann Boring, and you can find me on Twitter at PerryAnnDC. Until next time, thanks for joining us on Crypto Trader.
Crypto Trader is proudly